Yeah, I think it's really interesting what's happening in technology generally. The pace of change has obviously accelerated and continues to accelerate. What we see now with our smartphones is pretty amazing. Everyone's carrying a very powerful PC in their pocket. So that's obviously been a big impact. But one of the things I think that's key is what's called the API economy. API is application programming interface, and that is a little bit of software that enables software to plug into each other. And what that has enabled is any company who has a really good piece of software is able to connect to lots of others very, very quickly and seamlessly, and it enables them to scale globally very quickly. And that's vital in the value creation process. So we've seen some great companies, which we'll come and talk about, develop really good tech, but also get to market quickly, so they haven't been killed by the sort of sales ramp up that normally hurts technology companies. Being able to access global markets. So you're no longer confined to a specific geography where you can get feet on the ground. The best companies are going out there, they're partnering up with larger companies and able to access the global markets. And so even from a small base with a relatively small number of employees, you can hit some really big revenue numbers. And that's very exciting for shareholders. Management is always vital, and that's something we do a lot of due diligence and background checking on. I think as well, we're very keen for companies to have a strong competitive advantage, a strong defensible moat. If you haven't got that, you might make money in the short term, but you won't make money in the long run. I think that distribution power, being able to access the global markets, is very, very key. And of course, fundamentally, having a strong customer or user value proposition. So really adding value to customers and being of use in the world. So they're probably the four key things. We do as much sort of rigorous background checking as we can. So that's obviously using your contacts. It might be doing things like looking for people who know the company on LinkedIn, that kind of thing. Talking to customers, I think, is always really vital. So that's part of the DD process. And of course, we try and model these companies up, so get some financial projections, and that's obviously very difficult because these are very high growth companies. But we try and get a lot of rigor around that, and we also like to see that management have got a lot of skin in the game, and are not selling down. So if they believe in the project, there's no reason for them to sell any shares. So in an ideal scenario, they're just effectively everyone's aligned and going along for the ride together. Yeah, look, it's really, really difficult, and there's a huge number of hopefuls out there. Some of them are just a PowerPoint presentation and incredible valuation of 100 million or something, and they really haven't got very much at all apart from a nice story. So kind of how do we differentiate? Well, we'd like to take our time, do a lot of meetings, spend a lot of time getting to know them, talk to the customers, talk to key suppliers. At the end of the day, though, it's hard as an investor to really assess tech. So one of the key issues is, are customers paying for it? So you really want to see customers handing over hard-earned revenue, hard-earned cash, turning that into revenue as the ultimate validation for a piece of technology. If you went back sort of 10 years, I think the path to building a decent customer base and then turning it into monetizing it, turning it into revenue in the way that Facebook did, I think was a fair bit slower than it is now. The pace of change has accelerated to such an extent that now consumers and businesses are ready to adopt new technology much more quickly than they were in the past. And in fact, there's really a requirement to do so, because if you're not adopting the latest technology, you're at risk of being left behind and being outcompeted. So I think now it's quite possible, and we've seen this with some of our high growth tech companies, to go from zero to $50 million and $100 million of revenue in 2 or 3 years' time, which is really phenomenal. I think Australia is definitely emerging as a tech player. I think we've got some very good, talented people here who are generating good businesses. We're also providing a platform for entrepreneurs from overseas. So we've got some great technical companies like Updata, for example. David Greenberg, fantastic manager, based in New York, but has ended up coming to Australia because the cost of capital for him here is a lot cheaper than venture capital would have been in the US. Now, one of the advantages of our rich mining heritage is that the ASX is actually open to business for companies that are very small and that are pre-revenue. And so we have got these amazing companies like GetSwift, like Updata, like Megastar, who are able to effectively tap into VC-style equity in our market. And for an Australian investor, that's fantastic because it gives us access to wonderful global businesses that we wouldn't otherwise be able to access. So I think it's a virtuous circle, and hopefully some of these tech companies are going to go on and be super successful, and that will encourage more tech companies to come and list in our market.